Welcome back to the deep dive. We're going to be diving deep today into what's been driving the markets lately, especially Tesla.
Yeah.
It seems like Tesla's stock performance has been especially crazy.
Oh, yeah.
And our listeners have sent in a really interesting mix of sources for us to dig into.
Sure.
A financial market update and a Federal Reserve report.
Sounds good.
So we're going to be exploring both the business world and kind of the bigger picture of the economy.
Okay.
So get ready. We're going to uncover what really caused that 20% surge in Tesla's stock.
Yeah.
And we'll see what history tells us about election uncertainty and how that might play out in the market.
Yeah.
And lastly, we're going to take a look at how the Fed sees the economy's future. What do you think? Pretty interesting mix, huh?
Yeah, it's going to be a fascinating ride. I'm excited.
Me too. All right, so let's jump right in with Tesla.
Okay.
They've been on a roller coaster ride lately, haven't they?
Yeah, definitely a roller coaster.
It seems like Elon Musk's Robotaxi event back in early October, that kind of disappointed some investors, didn't it?
It did, yeah. It kind of led people to start questioning Tesla's plans for these autonomous vehicles.
Right, because, the event itself, it was all about these big futuristic ideas.
It was. Like that crazy cyber cab,
Oh, right.
the one with no steering wheel or pedals.
Wild.
Crazy. But what it lacked was concrete detail.
Mm.
I mean, I think investors were kind of left wondering, when is this actually going to happen?
Right.
How's it going to work? How much it's going to cost? And that uncertainty, I think that's what really sparked a wave of doubt. And, that's never good for a company's stock price.
Never good. But then came Tesla's earnings call, and it was like a complete shift in the narrative.
Yeah, it was like a 180.
So what was it about this earnings call that, suddenly calmed those investors' fears and ultimately led to that huge 20% jump in the stock price?
Well, the earnings call, it was all about filling in those gaps.
Okay.
It was about providing a roadmap.
Okay, so specifics, like dates and...
Yeah. Exactly. Specifics, dates, plans, you name it. Musk, he actually confirmed that Tesla's aiming for its full self-driving tech, the FSD,
Yeah.
to surpass human drivers by Q2 or Q3 of 2025.
Yeah.
I mean, that's huge.
That's a big milestone, yeah.
Yeah, a huge GE milestone for robotaxi viability and a really significant signal to investors. So okay, this is actually happening.
I see.
And not only that, they went a step further and clarified that the, existing Tesla models, like the ones on the road today,
Right.
those could be used for robotaxi services. So they don't even have to wait for the cybercab to be, approved and navigate all the regulatory hurdles.
So smart.
Yeah, they're leveraging what they already have. Genius. Plus, they revealed they're already doing internal ride-hailing programs for employees.
Oh, way.
Yeah, in the Bay Area. So, it's like robotaxis are much closer to reality than a lot of people thought.
So it's not just like, oh, yeah, someday in the future we'll have robot cars driving people around.
Right, exactly.
So, no, we're already doing it.
We're testing it. It's happening.
That makes sense why the stock, surged after that.
Yeah, totally. And I think it kind of highlights a pattern we've been seeing with Tesla. Right?
Yeah.
This year, their stock jumps, they seem to follow this pattern. It's concrete updates that get investors excited, not just visionary promises.
Right. So it's like, show me the money, or in this case, show me the working robotaxi.
Exactly. Show me the progress.
Yeah.
This wasn't just hype. It was like, look, here's what we're doing. Here's how it works. And the market responded. It's a demonstration of, tangible progress.
Yeah.
And that's what gets things moving.
Right. Actions speak louder than words.
Exactly. And what's really interesting about all of this?
What?
It suggests that Tesla, they're not just positioning themselves as a car manufacturer anymore. They're more like a transportation platform.
Oh, I see.
Like they have the potential to disrupt traditional taxi services.
Yeah.
Like Uber and Lyft, and revolutionize how we even think about urban mobility. It's pretty huge, and it's a development worth keeping an eye on.
Yeah.
Especially how their competitors react. What are they going to do?
Right, because if Tesla's really pulling this off, it's going to be...
Game changer.
Yeah. All right, well, let's shift gears a little bit.
Okay.
Let's move from the tech world to something else that could impact the market. The 2024 U.S. election.
Oh, yeah, that's a big one.
There's been talk about a possible election deadlock, and I think we all remember those nail-biting finishes in 2000 and 2020.
Oh, yeah.
Those were close.
Too close for comfort.
So could that type of uncertainty throw the markets for a loop?
That's a great question. And actually, BlackRock's research director They've warned about the potential for, weeks of uncertainty,
Oh, wow.
similar to what we saw in those previous elections.
So are we talking like a market crash? What could happen?
Well, let's look back at history for a second.
Okay.
Back in 2000, remember Bush versus Gore?
Hmm.
That election took over 5 weeks to resolve
Wow.
because of those disputes over vote counts. And during that whole period, the S&P 500, it dropped by a significant 10%.
Oh, wow. So that's a big drop.
Yeah, it's a lot. Now, it's important to note that, like, the dot-com bubble bursting, that definitely contributed to the decline.
It
But
was happening anyway.
yeah, it was already happening. But the uncertainty surrounding the election, that just added fuel to the fire.
So even if the market's doing well, if there's this big uncertainty,
Exactly.
it can make things worse.
Absolutely. Uncertainty makes investors nervous.
Right. Makes sense. Okay, so 2000, not great. What about 2020?
Well, 2020 with Trump and Biden, that played out a little differently. The outcome was much clearer, right?
It was, yeah.
And what happened? The S&P 500 rallied. It actually gained over 6% as that uncertainty faded.
Oh, wow.
And, the Fed's actions at the time to kind of support the economy, that helped too.
So it sounds like a quick resolution. That's good for the markets.
Right. The faster, the better, as far as the markets are concerned.
Less uncertainty.
Exactly.
So, okay, we've got these two examples from history.
Right.
But what does this actually mean for us with the 2024 election coming up? Like, should we be worried?
Well, I think history shows us that, these prolonged election disputes,
Yeah.
they create volatility in the market.
Okay.
But we also got to remember that the overall health of the economy, that matters more in the long term.
So if the economy's doing well,
Right.
it might not be that big of a deal.
Exactly.
Okay, so should we be like, battening down the hatches, bracing for a market crash, or is it going to be smooth sailing? What do you think?
Based on most economic indicators, it seems like we're on track for a continued bull market.
Oh, okay, so things are looking good.
Yeah, things are looking good. Unless we see a sudden and dramatic economic downturn,
Yeah.
what economists call a hard landing.
Yeah, a crash.
Yeah, crash landing.
Yeah,
But right now, things are looking relatively stable.
that's good to hear. Phew. Okay, well, speaking of the economy, let's take a look into the Federal Reserve's crystal ball, which is the Beige Book.
Ah, yes, the Beige Book.
Mm.
Sounds mysterious, right?
It does.
But it's actually a really important document.
What is it exactly?
Well, the Beige Book, it's a regular report,
Okay.
and it summarizes economic conditions all across the U.S.
Okay.
So think of it like a pulse check on Main Street.
Mm-hmm.
It gives the Fed these really valuable insights that directly influence their decisions.
Oh, wow.
In fact, I think the recent rate cut was likely influenced by, what they saw in the Beige Book.
Really? Oh, that's interesting. They just slashed rates
They did?
by 50 basis points.
Yeah, 0.5%.
Which is a lot.
That's a big move. It shows that they're serious about trying to stimulate the economy.
They're really trying to get things moving.
Exactly.
So what's the Beige Book's overall diagnosis? What are they seeing right now in the economy?
Well, the Beige Book, it kind of paints a picture of an economy that's largely stable.
Okay, that's good.
There's some modest growth in some regions, but most areas either kind of held steady or saw slight declines.
So no huge booms or busts.
Right, exactly. Just a gradual simmer.
Okay, so slow and steady.
Slow and steady wins the race.
All right, so that's the big picture. What about some specific sectors of the economy? Like what's happening in the world of manufacturing?
Well, manufacturing, that's always a key indicator of economic health.
Yeah, it is.
And it's been a bit sluggish in its recovery.
Oh, no.
Yeah. You can kind of see this by looking at what's called the PMI.
The what?
The PMI, the Purchasing Managers Index. It basically just measures how active factories are.
Okay, I see.
And right now, that PMI, it's still in contraction territory.
Oh, no, that's not good.
Yeah, which basically means that manufacturing is slowing down. And this points to, some weakness in consumer demand, especially among lower income groups. They might be cutting back on purchases.
Right, because when people are feeling financially strained,
Exactly.
they tighten their belts, and that impacts manufacturing.
Makes sense, right? Makes sense. If you're worried about money, you're not going to buy a new car.
Exactly. Okay, so manufacturing, not looking so great. What about the banks? How are they doing?
Well, banking activity has been fairly stable, actually.
Oh, okay.
There's been some growth, but it's been spurred by anticipation of further rate cuts.
Oh, I see.
Banks, they rely on interest rates for lending and profitability.
Mm-hmm.
So when rates are low, it can be a challenge for them.
That makes sense.
So this anticipation of future rate cuts, it's led to some improvement in, sentiment within the sector.
Okay.
So it suggests that a potential recovery is on the horizon.
Fingers crossed.
Yeah, exactly.
Mm-hmm.
However, the Fed might need to make even bolder moves with rate cuts to really get things moving.
So it's like the banking sector saying, come on, Fed, give us a little more help.
Exactly. They need a boost.
Yeah.
Now, what about the job market? That's always a big one.
Yeah, what's happening there? People are always concerned about jobs.
Well, there's actually some good news on that front.
Oh, good.
We're seeing moderate job gains and layoffs are staying low,
Okay.
which are both positive signs.
So people are keeping their jobs
Yeah, exactly.
and new jobs are being created.
Yep. And you know what's interesting?
Right.
A lot of companies are actually finding it pretty difficult to find skilled workers.
Oh, really?
Yeah. They're like, where are all the qualified people?
Well, that's a good problem to have in a way, right?
It is.
It means that the labor market is healthy.
Exactly. It's healthy and stable,
Yeah.
but, it does raise concerns about rising labor costs.
Oh, I see. Because
Yeah.
if they can't find workers, they have to pay more to attract them.
Right. Exactly. And that could impact business profitability down the line.
Right. It's a balancing act.
Definitely a balancing act. So the Fed, they're taking all of this information from the Beige Book
Right. Right.
and all the other market trends and global events, and they're trying to, steer the economy toward that soft landing we discussed earlier.
So are they thinking we're headed in the right direction? Are they optimistic?
I think they're cautiously optimistic. They're expecting gradual improvement rather than a sharp economic downturn.
So they're hoping to, gently tap the brakes on a speeding car without sending everyone through the windshield?
Exactly.
Yeah.
It's a delicate balance for sure.
Well, we've covered a lot of ground today. Tesla's roller coaster, the potential impact of election uncertainty, the Fed's economic insights from the Beige Book. What are the, key takeaways you think our listeners should be focusing on in the coming weeks and months?
Oh, that's a great question. Let me think. I think one of the most important takeaways, especially from the Tesla story,
Yeah.
is that actions speak louder than words.
Mm-hmm.
Investors are savvy.
Yeah.
They're looking for substance, not just futuristic visions. Tesla's stock performance this year, it's been directly tied to, tangible updates and demonstrable progress.
So they're not just buying into the hype anymore.
Right. They want to see results.
Show me the results.
Exactly.
All right.
And, as we head into this 2024 election,
Yeah.
it's important to pay attention to how any potential disputes or uncertainties unfold, right?
Right.
We've seen that a prolonged deadlock can really rattle the markets. But history also tells us that the bigger economic picture, that tends to have a stronger and more lasting influence.
So don't panic if there's, a bit of volatility around the election.
Thanks.
Focus on the fundamentals.
Precisely.
And speaking of fundamentals, the Beige Book gives us that valuable glimpse into the inner workings of the economy.
And it seems like the engine's running a little sluggishly, but it's not stalling out completely.
So it's just chugging along?
Yeah, chugging along. The picture we're seeing, it's one of, modest growth, with some sectors performing better than others. Manufacturing, like we talked about,
Yeah.
that's a key area to watch. If consumer demand picks up, that could signal broader economic strength and be a really positive indicator for future growth.
And it seems like the Fed's doing their best to fine-tune things with those interest rate cuts.
Yeah, they're really trying.
It's a tough job, right? Trying to encourage growth without fueling inflation.
Absolutely. They're walking a tightrope, and their actions, they're going to have ripple effects throughout the market.
Okay, so we've got this mixed bag of signals,
Mm.
some positive, some cautious. What's your overall assessment? Where are we headed?
Well, based on the information we have, I'd say the outlook is cautiously optimistic.
Cautiously optimistic.
The economy's moving forward, even if it's a bit slow.
Slow and steady.
And the Fed is actively trying to manage the situation. While there are potential risks, like the election uncertainty,
Right.
the underlying fundamentals seem relatively sound.
So no need to hit the panic button just yet.
Not yet.
But, as always, it's smart to stay informed, right?
Absolutely.
Be prepared
Always be prepared.
for those potential shifts in the market.
You never know what's going to happen.
This deep dive has been great.
Oh, it's been fun.
We've covered so much,
Yeah, we have.
and you've given us a lot to think about.
Lots to ponder.
But before we wrap up, I actually have a question for our listeners.
Oh, I love a good question. Hit them with it.
All right, so listeners, considering everything we've talked about today, Tesla, the election, the Fed, what are your thoughts on where the market is headed?
What do you think?
And what other factors might influence its trajectory? Remember, we've only scratched the surface here.
Just the tip of the iceberg.
There's a whole world of information out there for you to explore.
Dive deeper.
This deep dive is just a starting point.
A jumping off point.
Use these insights, do your own research, and come to your own informed conclusions.
Be your own expert.
Exactly, because remember,
Remember,
the most successful investors are the ones who stay curious, stay informed, and never stop learning.
keep learning, keep growing.
Love it. Well, that's a great note to end on. Thanks for joining us on the deep dive. Until next time, happy investing.
Happy investing, everyone. They're trying to kind of gently tap the brakes,
Yeah.
on the economy
Right.
without sending everybody through the windshield.
Yeah, it's a delicate balance for sure. So we've covered a lot of ground today.
Yeah, we have.
Tesla's wild ride, the potential impact of election uncertainty, and the Fed's economic insights from the Beige Book.
It's been a busy day.
It has. So what are some key takeaways? Like, what should our listener be focusing on in the coming weeks and months?
Well, I think one of the most important takeaways, especially from the Tesla story, is that actions speak louder than words.
Mm-hmm. Yeah.
Investors, they're savvy these days.
They are.
They're looking for substance, not just futuristic visions.
Right.
Tesla's stock performance this year, it's been directly tied to those tangible updates and demonstrable progress.
Yeah, they're not just buying into the hype anymore.
Exactly. And as we head into the 2024 election,
Mm-hmm.
it's important to pay attention to how any potential disputes or uncertainties unfold.
Yeah.
We've seen that a prolonged deadlock can really rattle the markets. But history also tells us that the bigger economic picture, that tends to have a stronger and more lasting influence.
So don't panic if there's like a bit of volatility around the election.
Right.
Focus on the fundamentals.
Exactly. That's the key.
And speaking of fundamentals, the Beige Book gives us that, valuable glimpse into the inner workings of the economy.
Yeah, it does. And it seems like right now the engine's running a little sluggishly,
Yeah, it does.
but it's not stalling out completely.
So it's like chugging along.
Chugging along, yeah.
Yeah.
The picture we're seeing, it's one of, modest growth.
That's
Some
okay.
sectors are doing better than others.
Right.
Manufacturing, like we talked about,
Mm-hmm.
that's a key area to watch. If consumer demand picks up, that could signal broader economic strength and be a really positive indicator for future growth.
Okay. And it seems like the Fed's doing their best to fine-tune things with those interest rate cuts.
Yeah, they're walking a tightrope for sure.
It's a tough job, right?
It is. Trying to encourage growth without fueling inflation.
Yeah.
It's a tough balancing act, and their actions are going to have ripple effects throughout the market.
Yeah. No doubt. Okay, so we've got this mixed bag of signals right now. Some positive, some cautious. What's your overall assessment? Where are we headed? Are you feeling optimistic?
Based on the information we have, I'd say the outlook is cautiously optimistic.
Okay.
The economy is moving forward, albeit a bit slowly,
Slow and steady?
and the Fed is actively trying to manage the situation. While there are potential risks on the horizon, like that election uncertainty we talked about, the
Yeah.
underlying fundamentals, they seem relatively sound.
Okay, so no need to hit the panic button just yet.
Not yet.
But, as always, it's smart to stay informed, right?
Absolutely.
Be prepared for those potential shifts in the market.
You never know what's going to happen.
Well, this deep dive has been great.
Oh, it's been my pleasure.
We've covered so much,
We have.
and you've given us a lot to think about. But before we wrap up, I have a question for our listeners out there.
Ooh, I love a good question. Let's hear it.
So, listeners, considering everything we've talked about today, Tesla, the election, the Fed, what are your thoughts on where the market is headed?
Yeah, what do you think?
What other factors do you think might influence its trajectory?
Yeah, because remember, we've only just scratched the surface here.
This is just the tip of the iceberg.
There's a whole world of information out there.
So much more to explore.
Go deeper, dive in.
Exactly. This deep dive, it's just the starting point.
A jumping off point.
Use these insights, do your own research, and come to your own informed conclusions.
Become an expert yourself.
Exactly. Because remember,
Remember,
the most successful investors are the ones who stay curious, stay informed, and never stop learning.
always learning, always growing.
That's a great note to end on. Thanks for joining us on the deep dive. Until next time, happy investing.
Happy investing, everyone. And, it's crucial to remember that all investing comes with risk.
Oh, absolutely. Past performance is never a guarantee of future results.
So true.
That's Investing 101.
It is. Which is why it's so important to diversify your portfolio and make those informed decisions, Decisions that align with your own financial goals and risk tolerance.
Yeah, that's such an important point. It's not a one-size-fits-all approach.
Right, exactly.
And don't forget, there are resources out there if you need guidance. Consulting with a qualified financial advisor, that can be super helpful.
Oh, I totally agree. A good advisor, they can help you navigate the complexities of the market,
Hmm.
and develop a personalized strategy that works for your unique situation.
Yeah, because everybody's different.
Exactly. Everyone's got different goals.
Different risk tolerances.
Exactly. Well, I think we've covered a lot of ground in this deep dive,
We have.
exploring Tesla's journey, the potential impact of the upcoming election, and the Fed's efforts to steer the economic ship.
Yeah, it's been quite a ride.
It really highlights how interconnected everything is, doesn't it?
It does.
Business decisions, political events, economic trends. It's like they're all woven together.
All part of this big, complicated dam.
Exactly. A dance that shapes the market.
It's fascinating and a little bit daunting sometimes.
It can be.
But that's what keeps things interesting, right?
It does. There's always something new to learn and analyze in the financial world.
Always keeps you on your toes.
Exactly. And that's what we're here for, right?
Yeah.
To help you make sense of it all and give you that knowledge to make informed decisions.
That's our goal.
So as we wrap up this deep dive,
Yeah.
we encourage you to keep exploring, keep learning, and keep diving deeper into those topics that, really pique your interest,
Because there's a whole world of financial knowledge out there.
just waiting to be discovered. So until next time,
Happy investing.
happy investing, everyone.